Hello, today is Friday. It is 4:46 p.m. June 10th, 2022. The weekend report title this week is The Street Didn't Like That Inflation Data, and this is your weekend report. Hello, this is Jonathan Gurney with Gurney Financial. A friendly reminder that this post is for informational use only. The views expressed are those of the author, Jonathan Gurney. That is me. This material is not intended to be relied upon as a forecast, research, or investment advice. It is not a recommendation, offer, or solicitation to buy or sell any securities or to adopt any investment strategy. Put plainly, this is basically for clients, keeping them aware of what I'm seeing and the game plan ahead. So overall, the performance for this week, let me switch screens real quick, 1 second. So overall, the S&P 500 had a terrible week. We actually did not do too bad. I definitely took some shots, but kept losses small. So as you can see, first 2 days, not too bad, but we lost very quickly. And I'll show you the key level that I was watching to see if we could really get some traction or not. As you can see, I'm in a different location today. It probably looks like I'm in a dungeon that I forgot my lighting, but overall you'll be able to see what's important, and what I look like is not important. So overall, let me switch screens real quick. But overall, we are beating the S&P by about 10.91% since September 3rd, 2021, which is pretty good. I mean, this is a very difficult market, so the fact that we're beating that much is a really good thing. For the week, you can see the indexes were just brutal. Nothing to hide there. For the year, you can see we're getting close to that 20% again. I still think we need capitulation, but that does not mean that we can't go higher Monday. It would not surprise me if we go higher Monday. I would like to see a few key levels touch, but overall, the sectors as well this week. All the sectors, not pretty. The one that was okay was energy, and even that took a little bit of a tumble later in the week. So overall, you can't fight the tape. When things are dropping like this, when you get a bad inflation report, it's going to put a lot of pressure on the Fed, which the Fed meeting is this week. So that's very, very important. Would it surprise me to have a couple-day relief rally back to the 5-day moving average? And I'll show that to you. No, it would not surprise me at all. So overall, not a bad week for us. It was a red week, but we protected when we needed to. And as you can see here, here's what I was looking at. I got out right around here as it was tumbling down below this triangle. This triangle is what I've been watching for days. This is a very simplified version of the chart, but once this broke, I really didn't care what the news was. I thought the price would follow. So overall, not great price action this week. You have to be real about it and just get out while things are bad. But would it surprise me to get good Monday, Tuesday, Wednesday? Somewhere in there, a little relief? Not really. 1 second. We're going to start the timer now so we can get moving. Okay, so 3 minutes. Here we go. There's the short term, midterm. This is really what is important. Obviously, it was an ugly day, but once we crossed, I basically have been saying for the last couple weeks, this looks a lot like this. And in fact, if you count overnight, this bar actually did get up to near 4,200, and it almost looks identical to this. Okay, so we did tumble. I would like to see one more red day. If we open red, I think it'll bring buyers in faster. Do I ultimately think midterm this is the low? I don't, but I will play long if we probably get a red open on Monday. So overall, I think there are opportunities still, but you have to be realistic. And I would love to see, like, this was my plan today. If bulls lose 49.45 today, it's going to get ugly. We tested 39.05, bounced to 39, almost 39.40-ish, a little above 39.40-ish, couldn't hold, tumbled into the close. Overall, would I be shocked to see the S&P 500 go up on Monday and Tuesday? Not really. There's still a lot of complacency. as you can see, here's the VIX. And this is what I've been watching. This break here, which the VIX is basically volatility or fear index. There's a lot of fear starting to increase, but it's still pretty complacent. We got to the top here, resisted. So it's going to take some time to work through this. I'm just being realistic with you. So the key top 10 stocks in the S&P 500, obviously ugly today, and for the week, also ugly. Have to be realistic about this. What you're noticing here is the one name that did somewhat decent this week, better than the worst, was more of a healthcare caution area. So healthcare tends to be okay, more like a dividend play during the more of a stable area during these declines. So none of this surprised me whatsoever, but you're seeing there will be opportunity coming. It's just going to take some time. So overall, the one thing left that I want to show you is here's the chart. We've actually handled this dip pretty well. Not perfect by any means, but last 2 weeks, not too bad. The midterm chart, as you can see in June, here's kind of what I'm thinking. I mean, we're kind of seeing this. I would love to see a red open Monday and hopefully get a little relief. I'm not saying this happens, but if it does, I wish it would so we could get it over with. So overall, thanks for your time. Not a horrible week. We're protecting when we need to. The last 2 weeks have not been bad trading. The fact that you can beat the S&P 500 by 10.9%, that's kind of doing my job. And if I can continue to trade this way, and I'll be honest with you, when I'm beating the index by this much, it gives me the opportunity to get and take a little more risk at times. I got to see buying, though. We got to regain a key level, and we're really not doing that yet. Could change immediately Monday. So it's better not to have a bias. If you're like, Jonathan, do you think we're going to tank? I'm not even going to go there because I don't even need to. We can make money in a good and bad market. So thanks for your trust. Overall, we're doing what we need to do. The faster we plunge, the faster this gets over. This is not a 2020 where everything dipped 38% in a month and regained it all. I wish that would happen, but it's a slow burn, sideways, down, up, sideways, down. It's not a fun market. People are expecting this to just immediately come back. It's not that kind of market, and I don't think it's going to be that till later in the year. But obviously, there's opportunities every day, every week. Right now, the trend is still down. We have to respect that. Doesn't mean that's going to not change toward the end of the year or even next week. So big FOMC Fed meeting to decide what's going on with interest rates. I would rather them rip the Band-Aid off and have rates go up 75 to 100 basis points because inflation is a problem. So overall, the market will get over this. Just keep your psyche optimistic and we'll be okay. Thanks, guys. Have a good weekend.